Good morning, Alex Cole, and welcome to the latest episode of GoNoGo Charts here on StockCharts TV. How are you doing today, my friend?
I'm very good, ready to go. Excited for
Excellent.
another show.
Yeah, you still got the parents in town, having a little family time?
Yes, we've been doing some things. They like to just see what's going on here in our life across the pond, as everybody says.
Absolutely, absolutely. Well, let's dive into some charts, and we'll get back to your parents here in a little bit. Everybody's question on their mind: is this market risk on? Is it risk off? Yesterday was a pretty heavy day, but we've seen a massive rally. In fact, some of the analysts that we talked to here on the street, we're talking about the 10-day percentage change in the S&P hitting some record levels. So we've obviously had a real strong bounce out of this recent negativity. Alex, I am seeing a fresh go signal on this S&P chart. Why don't you walk through what we're seeing from a go-no-go trend perspective?
Yeah, obviously enough has happened this time around with price movement to signal a new go on the go-no-go trend. And this kind of strong rally, I was looking at it and comparing it to the rally we saw here. If you can see this, my mouse moving end of January into February. This was another really strong rally, and we were talking to Dave Keller in and around here about this level being resistance, and what would happen next. Now, what seems different to me this time, if we're going to try to be objective about it, is that this rally happened all on no-go bars, and with the oscillator rallying and then really being held off by the zero line. There was this little blip here, but generally speaking, we saw the oscillator stay below zero, being held at zero as resistance, and then rolling over again. This time, this rally has actually seen the oscillator get quite significantly into positive territory, as we then saw the amber bars and the fresh go. So price movements looks relatively similar, but maybe this is a slightly more bullish situation. Amber bars, oscillator above zero. We're seeing this high here, if this set is slightly higher than this previous sort of intermittent high. So maybe slightly more bullish conditions this time around.
Absolutely. Classical technical analysis approach. We want to first focus on price, most important indicator that we've got, and then we want to turn our eye to momentum. So Alex, just as a quick review for anybody who's new, this is episode 12. We've been at this for about a dozen weeks here in 2022 with the great team over at StockCharts TV. For anybody who's new to watching the show, just walk us through the colors of go-no-go trend in that upper panel, the price panel. What are we looking at here?
Yeah, absolutely. So what we look at, if anybody is completely new to go-no-go charts, is taking a blend of some of the most robust and sort of well-used trend following concepts and statistical measurements, and then based on what we return there in terms of criteria being met, we color the price bar according to the strength of the trend. So very simply, when you're seeing blues, blue and aqua colors, then we're in a go trend, meaning enough of those conditions are being met to say that we are in a go trend. When you see the purples and the pinks, these are the colors of a no-go trend, obviously the opposite of a go trend. And then when you see these amber bars that often act as a transition between colors, these are our go fish bars, and that comes from Tyler's love of the Jesse Livermore quote: there's a time to go long, a time to go short, and a time to go fishing. So when the market is sort of undecided or neutral, then we paint these amber, and those are the go fish bars. So blues, blue and aqua, go; purple and pink, no go; amber, go fish.
Absolutely. Just taking the weight of the evidence, a blend, a composite of all of the best, most widely used trend following technical indicators in terms of price moves. And then in the lower panel, what we're talking about here, Alex, is the confirmation of momentum. So the go-no-go oscillator can be used just like any traditional oscillator. You might be familiar with something like an RSI, but the same idea of blending a composite mold of multiple momentum conditions. When all of those conditions come together to get us above that zero line, that means we've got positive momentum. We're in overbought territory, and then below that objective zero line, we've got oversold conditions. Alex, what I find fascinating is just how you can use data visualization to represent a lot of information without cluttering the chart. Tell us that difference between the aqua and the blue line in the GoNoGo oscillator. What are we looking for there?
Yeah, so of course, originally the idea was to create a complete technical picture of any asset over any time frame using just one chart that hopefully wouldn't complicate matters for whoever was looking at it. So
Right.
volume is, of course, an important piece that we wanted to include in the chart. And so the volume, the signal of volume and how heavy or not heavy market participation is in a price move is captured in the changing color of the GoNoGo oscillator. So when the GoNoGo oscillator turns to a darker blue, then we know volume is relatively heavy. And when it goes to the lighter aqua, then it's lighter than an average of its historical volume. So when you see a break on a no-go, a break of the zero on heavy volume, then that tips us off that this is a strong reversal, a strong move down into this no-go trend. And now we are seeing some lighter volume as prices rally. So that's also interesting to note.
Absolutely, a skittish market for sure, but we've seen this rally taking shape over the last 10 trading days, and certainly entering that fresh go in terms of the overall trend conditions, and seeing that confirmed with momentum gives a little more weight to the evidence of perhaps being in a risk-on environment or equities coming back into favor. Alex, let's we've talked endlessly in 2022 about the oil story. It was up another 5% crude futures yesterday, but let's skip past the oil narrative and let's just check in on the Qs, the Nasdaq 100. We've got a lot of analysts that have been looking at perhaps what were some of the most beaten down stocks, the growthier equities, the Nasdaq 100 leading tech companies compiled in there. Last week, up 8.2%, continuing to climb this week. And then we've had a lot of analysts just writing about the breadth thrusts that, more and more stocks within that Nasdaq 100 are participating above their 20-day moving average. But let's look at the GoNoGo charts perspective in terms of what's happening, perhaps in the growthier technology-driven names of the Nasdaq 100.
Yeah, absolutely. So this is really a fairly similar looking chart to the S&P in terms of that fresh go being identified. But what I like to try to do sometimes with these GoNoGo charts is, of course, use traditional technical analysis. And we often see important things happening with the GoNoGo tools around important price levels. So this was a trend line that has been on a lot of people's charts. Really does a good job of coming through these lower highs in this downward sloping trend. And then as the oscillator was finally able to get back above the zero line, it broke above that trend line. So some more positive signs there on these growth names that make up the Qs. And then, of course, we did see the couple of amber go fish bars and then the aqua go bar being identified today.
Excellent. So is it all over? Is all the volatility gone? Are we done trading the cyclical and defensive sectors? Is it right back to those technology names that we saw leading the market after the COVID collapse in 2020? I think it's important not to get swept up in the narrative. Alex and I talk to all of our viewers every week on this show, and then all of our clients throughout the week, just about separating some of those emotions from our disciplined trading routine, looking instead at the weight of the evidence. So, Alex, if you've got a second, let's just pull up a chart of the VIX. I know the relief is pronounced in households across the world, right? That volatility has cooled a bit, that we're recovering a bit of those losses. But as they say, even a dead cat will bounce if you throw it hard enough off a tall enough building. It's cooled, but the VIX is still above 20, and we're looking at this on a weekly basis. Alex, from a trend perspective, if we're looking at volatility and the trend thereof, we're still in a go trend, right? It's cooled, but we're still above in elevated levels above 20. What stands out to you on this chart?
Yeah, and if you noticed, we had the daily chart of this up right when we changed to the VIX, and it was just in a no-go, so volatility coming down again. But I think it's important to keep in perspective the volatile nature of the markets at the moment. And we saw through most of 2020 volatility declining and going into that no-go that we saw really going all the way through until the end of the year. This is the weekly chart showing that really in the last few months, volatility has started to rise again. And like you said, still a little bit elevated, still in a go trend from a longer term perspective. And what we will be looking at here is, of course, again, the zero line, as everybody's familiar with now, and see if the zero line acts as support here while the VIX is in this go trend.
Absolutely. So longer term perspective, perhaps a little bit more constructive work to be done underneath the surface. It's great to see some of those go trends emerging for the SPY, for Qs. But Alex, let's get under the hood a little bit. Has the rotation completely switched back? Are we done trading any of the cyclicals and defensives? And for that, let's switch over to a GoNoGo RelMap. So this is going to take a look at the sectors of the S&P 500, but not just their absolute trends. We're going to look at the trend conditions of the ratio from each sector against the benchmark S&P 500. So we want to look for leaders and laggards within the sector groups just to try to get an understanding of the nature of this environment. And indeed, as the equity markets have rallied over the last several sessions, we're seeing a lot of relief amongst investors who were quite beat up through February. But Alex, has it rotated away from what we've been seeing? Let's go through this RelMap real quick.
Not really. And we talked about it in the flight path note at the beginning of the week that that was the question: are we risk on or not just yet? Have we seen the end of that rotation away from growth names into value? Again, we're not really sure. You see how the no-go trends on a relative basis are still technology, discretionary, and communications, as they have been now since the beginning of the year. They are in weaker pink no-go conditions, but we do still see that the leadership is coming from energy, industrials, materials, healthcare, some of those more value cyclical sectors. So right now, the map still looks very similar to what we've been looking at over the past few months.
Absolutely. And I think that's really important for investors to keep in mind that we are not simply seeing a complete reversal of that value and growth trade. We're not seeing the total demise of what has been a really strong energy trade. As I mentioned at the outset, crude oil was up over 5% just in yesterday's trading. Let's talk about the other sort of safe haven asset in an inflationary economy that we have here in the States. The gold trade was getting a ton of attention, certainly for that long-term cup and handle view. But as you sent out to our subscribers first thing Monday morning, GLD has come down about 6.5% off of that March 8th high, and we're still seeing a go trend on that weekly and daily basis for the gold trade. So potentially retracing some of those parabolic gains, but we want to look at the weight of the evidence for the trend over the longer term perspective to get an understanding of whether or not this is dead on arrival or if we've got some legs to go. So if there is a GLD chart, I think we're still looking at an SPY. Let's pull up that gold chart on the daily time period. Excellent.
Yep. So this is GLD, and again, we saw that really strong move up, and we saw that correction back to the zero line, and we're really watching that now to see if it finds support. It looks to have found support. There was a slight dip under the zero line here, but we've rallied over the last few days. So growth names rallying, but also gold rallying over the last few days. And we didn't bring up that oil chart before, but oil also rallying off support at the zero. So still undecided.
Absolutely. Let's switch the narrative a little bit. In 2021, we saw Tesla becoming just like the meme stocks in terms of the options market. Almost half of the volume of the options market was covered by Tesla. Let's just look at what retail investors are doing with their Tesla trades this week.
We're looking at Tesla now. Can you see Tesla up here?
Absolutely. Thank you, Alex.
Tesla's really raced away. One of those names driving these growthiest sectors, maybe to weaker no-goes. We saw the couple of amber bars. We saw higher lows in the oscillator. We saw it break through the zero line. We're seeing heavy volume, and now, of course, aqua go bars. So Tesla looking strong again at the moment.
Absolutely. Alex and I are here to help you with your analysis. We're not trying to tell anybody what their trading strategy ought to look like or even what time frame makes sense. That's really a personal decision based on your own risk parameters. But I just can't help myself, Alex. I really want you to pull up a chart of GameStop, GME. That's also been a big part of the narrative this week. And we know that there are 100 million new retail traders in the US stock market just over the last couple of years. What I think is really helpful to think about, if the short game is where you have found your success, then GoNoGo charts are going to identify those entries for you. If, let's say you're looking at an hourly chart. So here we're looking at that 60-minute bar on GameStop. Alex, we've been in a strong no-go trend for a long time, and certainly the elevated levels of 2020 for this particular shares of GameStop seemed beyond imagination. Are we back? Is this going to the moon again, or do you see something else on the chart?
You know me, Tyler. This is not my meme stocks and intraday. We're looking at what the markets are telling us, and there's been such a growth in retail investors and retail traders. And so if that is where you are and you're looking to make money on this 10-day, like you said, 10-day historic rally in growth stocks or in sort of the S&P itself, then sure, you can turn to a shorter time frame chart, something that's all over everybody's Twitter and something that's really getting a lot of attention again is GameStop. And you'd go down in time frame. We've got this on a 60-minute chart here, and you can see that trend change on the 18th and really then scream away. You get your go trend continuation icon telling you that momentum on this time frame is back in the direction of the go trend. And there's your rally over the last 6 or 7 days in GameStop, taking us all the way back up to at one point 150, I think, from where we were down at 80. So really, really strong rally pulled out if you go down in time frame by GoNoGo charts. Right now, we're testing the zero line. We'll look to see if we get support and perhaps we get another low risk entry in the form of a go trend continuation icon. But again, this is trying to capture that crazy swing that that obviously some people will be doing. If you want to keep it all in perspective, though, and you pull back out on GameStop and look at a weekly chart, this was that 2020 rally where GameStop really was an incredible sight to behold, almost in terms of the way investors traded this up. And you can see that on the weekly basis, weight of the evidence is still suggesting no go. This weekly bar is huge, but overall, still below the zero line. We'll look at what happens here when we come up to it, and still in a no go conditions for now.
The way that technical analysis was taught to me over a decade ago when I first joined the CMT Association was that you could cover up the time period, you could cover up the ticker symbol, and you could just think about the tools in and of themselves. And I think that it's a really helpful exercise to see this GameStop chart on a 60-minute, on an intraday basis, and you could look to capture those trend moves. But of course, to trade with multiple time frame perspectives to see what this is doing on a longer term pitch. This might be a $6 stock, and it happens to be supremely elevated. It's not really our place to forecast what's going to happen to any individual security. But I really like the way that you've developed these tools, Alex, in the capacity to use on multiple time frames to think about trading individual positions or to analyze the markets overall. And I think that's the main takeaway here. All right, so back to what we've been observing in this recent market rally. I want to turn our eye to actually a chart outside of the US. Let's look at EWA. Let's just look at the Australian index. And if it were that the mining and minerals and the defensive and cyclical sectors were no longer leading, how could it be that we would be seeing Australia just ripping to new highs? And this was something that we observed at the end of last week. It went out to our institutional subscribers on Monday morning. And of course, this week, Australia has continued to rally. This is not the growth tech sector dominated economy. We're talking about natural resources. So Alex, what's speaking to you in terms of a go-no-go perspective for this chart of the Australian ETF?
Yeah, the Australian ETF is a really nice proxy for that. Sorry, that move that we've been seeing in the cyclical sectors, and it's that question that we started the week with that I'm not honestly sure we have a clear answer as we get to the end of the week. The growth stocks, the overall index, the S&P, incredible rally over the last 10 days. But look at this incredible rally over the last 10 days in the Australian ETF. So there seems to be a lot of price activity and a lot of action and a lot of market participation in these two themes at the moment. It doesn't seem as if it's one or the other just yet. Whether that the balance will get tipped over the next couple of weeks, we'll have to see. But as you said, how can it be? But it is.
How can it be? But it
We're
is.
seeing this massive rally in EWA over the last 10 days.
Absolutely. And then let's turn our eye back to one of our favorites, something that we've been writing about for well over a year, and focusing on through the rally of 2020 and 2021, and that's the DBA, Diversified Agricultural ETF. Let's just check in on that on a weekly basis, if we can. Because when we're talking about these longer term moves, we want to be patient investors. We want to capture those trends that are going to continue over time. So in terms of portfolio allocation, everybody has recognized that the commodity space, in particular, supply chain disruptions around food since the invasion of Ukraine by Russia, has just accelerated this trend. So Alex, from a weekly basis, what are we seeing in this Diversified Agricultural ETF?
Yeah, and like you said, we've been looking at DBA for a long time, and it's because one of the reasons is it's a beautiful example of a strong trend that we can use in training materials and to talk to people about what you would expect to see in a strong trend. It really is a beautiful, very, very smooth. We see the little areas of weakness as price consolidates, as it moves up through the trend, but you see the go-no-go oscillator finding support at zero throughout the move, giving you these go trend continuation icons. And now for the last sort of 8-9 weeks, we're in a string of uninterrupted strong blue bars. So a very, very, excuse me, very nice trend to look at. And we're going to look at the bottom here to say that there is still heavy volume on these, the movement of the price over the last 2 months. Heavy volume, still in positive territory, not overbought, but not at the zero line. So we will watch the oscillator closely to see what happens. But yes, a beautiful chart of a strong go trend.
Fantastic. And along those same lines here, as we're coming to the end of today's show, we mentioned to our institutional subscribers the chart of John Deere looking like it was ready to run on Monday morning. And let's just see how that has played out this week on a daily basis.
Yeah, this one popped into our, from theme, understanding of the themes happening, as well as finding fresh go-no-go conditions. And so this is a fresh go trend. If you pull this back to a weekly chart, you can see that these levels are ones that were quite significant resistance at overhead, with overhead supply. And so we're looking to see whether John Deere can get above those levels. And this is what we saw and what we're seeing. We see the oscillator above zero. We see another fresh go with strong blue bars. And this has been a very good week, well, so sort of 5 or 6 days for John Deere and company.
Absolutely. Alex, as always, it's fantastic to talk with you and look through these charts, trying to understand the weight of the evidence from the market's perspective, not from the talking heads on various news shows. I really appreciate your insights and looking forward to seeing you. I believe next month you're going to be down in Washington, D.C., correct?
Yeah, looking forward to the first in-person CMT symposium in a couple of years. So that should be a lot of fun. It'd be nice to get together with all of the people that we've come to hang out with over the years and talk technicals in person. Absolutely.
The last decade has been a time to shape a lot of relationships and get to meet some really incredible innovators in the space. So that's April 20th and 29th in Washington, D.C. Certainly keeping me busy. helping to put together that agenda and make sure that we all have a safe space to get together in person. But looking
Yeah,
forward to seeing you, my friend. And for all of
absolutely.
you who are watching, whether you're on YouTube or you've got the on-demand app at StockChartsTV.com, really appreciate you tuning in each week to talk with us about Go charts.
Hey, Grayson Rose here with Stock Charts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.